Sixth we have not done, yes. Eighth we have done. Let us do ninth. Let us first read the question. CK Limited is planning to buy a new machine. See, now what is the decision to purchase a new machine? This is not a replacement decision. Cost of the machine at commencement is 2,50,000. Economic life of the machine is 8 years. Residual value is 0. Annual production capacity of the machine is 1 lakh units. Selling price is 6. Variable cost per unit is 3. Annual fixed cost is 1 lakh. See, everything is remaining same for all the years. What is the life of the machinery? 8 years. For all 8 years, practically everything is remaining same. This is excluding depreciation. Advertisement expense in first year, in addition of annual fixed cost, is 20,000. So now I will have to prepare year 1, year 2, year 3, year 4, year 5, year 6 because of this. Because this expenditure is at the end of first year. Maintenance expenditure in fifth year is 30,000. Cost of capital is 12%. Ignore tax. Please understand, if someone says me ignore tax, I will even ignore the depreciation. Right or wrong? Why we did this? We are subtracting depreciation and then we are adding depreciation. Then why to consider depreciation? Because it will give a correct answer of tax. Now if the company is having no taxation, then depreciation is not relevant. Neither to add it nor to deduct it. It will not make any difference because there is no tax. So once we ignore tax, we will have to ignore depreciation. I will not do for 6 years. Believe me, again, for 8 years, it will be repetition. I will use my brain and try to solve these 2 points. Because of these 2 points, I need to prepare 8 columns rather than 1 column. I am preparing 1 column still. 1 to 8 years. What will be my production and sale? 1 lakh units. At what rate I will be selling? 6 rupees. At what rate I will be purchasing? 3 rupees. What is contribution per unit? 3 rupees. What is the capacity? 1 lakh. I will be getting profit of 3 lakhs rupees. 1 lakh into 3. 3 lakh rupees is nothing but contribution. How I have found out? 1 lakh into 3. You can also do it like this. 1 lakh into 6. 6 lakhs is the selling price minus variable cost. 1 lakh into 3. 3 lakhs rupees. My contribution would be 3 lakhs. What I did, I find out contribution per unit and then just multiply it with number of units. From contribution, fixed cost is deducted. What is fixed cost for all 8 years? 1 lakh rupees. Yes, this costs are extra, but this is 1 lakh rupees. This will be 2 lakhs. Sir, we don't understood that depreciation should be ignored. Alright, let me explain you once again. Try to concentrate. This is my profit before depreciation and tax. Minus depreciation. I am not even finding out depreciation. Say depreciation is X. Alright. This will be 2 lakhs minus X minus taxation. Taxation is 0. There is no tax. So what will be profit after tax? 2 lakhs minus X plus depreciation. Depreciation is X. So 2 lakhs minus x plus x will be nothing but 2 lakhs. X is subtracted, x is added. Why we do it? To find out correct taxation. Now if the tax is 0, there is no use of depreciation. So I don't deduct depreciation, I don't deduct tax. This is my direct cash flow. There is no depreciation concept, there is no tax concept. This is my direct. Sir, this 20 and 30,000 rupees, believe me, I will consider. Is it all right? I will consider in an intelligent way so that I can prepare 1 to 8 years together. They are separate figure at different years. So can I write down 1 to 8 years cash flows is 2 lakhs rupees. It is 1 to 8 years. In 8th year, I am getting any scrap value? No. So scrap value is 0. At the end of 0 year, yes, 2,50,000. End of 0 year, present value of cash outflow 2,50,000. So I have considered all the points except this 20 and 30,000. Let me consider that 20 and 30,000 now. 20,000 is advertisement expenditure fixed in first year. I am assuming it is at the end of first year, which is 20,000. See how I am writing it down. At the end of first year, my expenditure will be 20,000. So instead of positive cash flow, I am writing down negative cash flow. And maintenance expenditure in 5th year, I am assuming at the end of 5th year, in addition to annual fixed cost will be 30,000. So it is at the end of 5th year and it is 30,000. Now we know how to play game of present value. I will be first finding out present value of this 2 lakhs at the rate of 12%. 1 divided by 1.12, 8 times is equal to GT multiplied by 2 lakhs. This is how you find it out. It is 9,93,527. Let me ask you just for fun. I told you present value whenever you find out you are removing interest. If you are removing interest, why the figure is more than 2 lakhs? Your present value figure is always lower, right? This is 2 lakhs. This is 9,93,000. 2 lakh is for 1 year. 2 lakh is for 8 years. So total it is 16 lakhs. And 16 lakhs you are discounting and you are getting 9,93,527. Now how I will discount this? In the same manner, 1 divided by 1.12 multiplied by 20,000. But I will be writing negative figure 17,857. 17,857. And I will be writing negative figure. This also I will be discounting it in same manner. 1 divided by 1.12, 5 times is equal to, because it is at the end of 5th year. 1, 2, 3, 4, 5. Multiplied by 30,000. 17,022. This will become present value of cash inflow, which is 9,93,527 minus 17,857 minus 17,022. 958,648. 958.64. I am finding out NPV. NPV is equal to present value of cash inflow minus present value of cash outflow. It is 958,648 minus 2,50,000 rupees. 958,648 minus 2,50,000. 7,08,648. NPV. Positive, yes, you should accept the project. Because of this two intelligent point, this will come to your mind only if you are very much comfortable with time value of money. These two figures, if considered in a normal way, I would have prepared this chart. I would have written contribution, then I would have deducted fixed cost from all the years. And in 2 years, I would have deducted 20,000 and 30,000. 20,000 and 30,000. And then I would have found out cash flow as it is given in the book. We would have done that had we not intelligently treated this two figure. We treated it as a cash outflow. We found out separate present value instead of combined present value, and we got the correct answer. So even in suggested, it is a very long method. You should not follow it for 5 marks. Believe me, you have saved your 5 to 6 minutes in your examination by just solving it in this manner.